Welcome to Pulling Chain, the blockchain distributed ledger cryptocurrency news channel for the capital markets industry. I'm Steve Edge. Well, I should probably start the show with the US election. You might ask, what does the US election have to do with digital currencies? Well, amongst the small community I spoke with, they believed that a Trump win was positive for Bitcoin and blockchain in general. In fact, the price of Bitcoin was up when it was clear that he was going to win, though that could have been because the US dollar was weaker, which I'm inclined to agree. If Mrs. Clinton had won, it was generally perceived as negative, as her campaign had called accepting Bitcoin too libertarian. Anyway, I just wanted to give a quick mention on the impact of blockchain in the US election. Now on to the interesting news. I'm not sure if you saw the FundsChain white paper that came out last week. It's a distributed ledger technology white paper for the asset management industry. If you have time, give it a read. I'll link it below. The paper outlines the idea of developing a distributed registry of funds units which would record subscriptions and redemptions by client. That way, they could accurately track assets held by clients and improve compliance and know your client obligations. Fund net asset value and trailer fees could be easily calculated as well. And due to the public nature of some distributed ledgers, it would be easy to see fund assets and liabilities and subsequently risk profile. Makes sense. I don't know whether this will impact redemption cutoff times or frequency, because at the end of the day, the fund needs to trade these securities at an exchange through a broker. The paper looks at cost savings, such as those born from reconciliation, which would be eliminated by the ledger. All data would be up-to-date, certified, and easily shareable, avoiding service providers exacting their tax along the value chain and liberating fund managers by controlling their own data. The authors of the paper believe that 10 billion euros can be saved annually, and this would be passed on to the end consumer. The paper contends that the visibility offered to the industry and transparency to customers will make this an ideal environment for regulators and welcomes their participation in the development of this platform. So if you haven't seen the white paper, do give it a read, and as I said earlier, the link is below. Well, R3's blockchain consortium was in the news again. They announced that they developed a proof of concept for KYC, or Know Your Client. The project was able to demonstrate the identity of an individual and a legal entity. Imagine not having to do KYC documents ever again. Duplications and annual updates will be gone. It will be interesting to see what each regulator thinks about this. Each one will certainly have a different view, bound by their different laws. Privacy springs to mind. R3 also announced a partnership with the Monetary Authority of Singapore. Their plan is to start developing blockchain applications for the city and the ASEAN region. Well, let's hope they have better success in the Asian trading link. The Russians are in blockchain too, and no, I didn't hear that from the Clinton campaign. The National Securities Depository is testing the exchange and transfer of Bitcoin assets or digital currency with a startup called ICONOMI software. The goal is to lower the entry of participants to access blockchain assets. Like most countries, there is an incubator or a lab or a sandbox for these startups, and ICONOMI software is a product of that. I like the innovation at the CSD level, particularly for block trading. Big pension funds could easily trade large blocks with one another without gaming or signaling to the market, and the cost of trading, of course, would be cheaper. Maybe we'll see that in the future. And speaking of sandboxes, the UK FCA's regulatory sandbox welcomed its first tranche of eligible firms. The sandbox offers startups an opportunity to showcase and develop their products without the regulatory burden that accompanies financial firms. 69 companies submitted applications, and 24 of them were selected to play in the sandbox. Most of the companies were in the payment space, though there was one whose product will serve IPOs. It looks like payment services are flooding the market, not just in the UK either. I mean, it's good for consumers, but we guess that only a few of them will survive in the end. I put a link to the list of companies below if you're curious who they might be. Well, on the subject of regulation, the Cointelegraph published an article that Teo Kino has filed a petition at the Supreme Court of New York challenging the BIT license issued by the New York Department of Financial Services. The BIT license was enforced last year, but Mr. Kino claims that before they can even enforce it, the New York State Legislature has to enact a law first. Well, apparently it costs $5,000 to process a BIT license application, and documentation can run into the hundreds of pages. It's largely because of this, most Bitcoin exchange operators in the New York State have closed down. The regulatory barrier seems to be far too high. I'll be watching this one with interest. I mean, how can an agency overstep its mandate like that and not be held accountable? Well, the last item I wanted to mention was the index rebalancing of ICONOMI cryptocurrencies index, the ICNX. The recent run-up of Bitcoin saw its weighting breach 20% of the index value, which triggered an automatic rebalancing back down to 15%. The rebalance also saw 3 coins exit the index as their average trading volume for the last 30 days was less than 50,000 US. One new coin was added called Game Credits. The index as of this recording was down 6.9% for the month and up 38.5% since inception. Well, that's it for this week. Don't forget to subscribe to our channel. Leave some comments below or send me an email if you can. You can find me on LinkedIn and that link is below as well. Enjoy the rest of your week. For Pulling Chain, I'm Steve Edge.